Good morning, traders. Caught in a little trade here. Uh, you can see the structure of this. It keeps coming down, and we put up a fair value gap right here. Consolidated, came down, consequent encroachment, 50% mark of that fair value gap, and then we put up another fair value gap. I entered on this consolidation with an expectation that we're going to take out the stops that are above these relative equal highs. I don't know if it'll get there. This is my practice account. I just took one, and then as it started going my way, I added three more. So I've got four contracts. Um, it could surpass this. It could stop at this one. Not sure. I'm just going to keep a close eye on it. I'm going to go ahead and move my stop to where I don't lose any money on this trade. But what I've been doing is I've been making these numbers, and then I haven't been stopping. I've continued to trade until I end up losing that number. That's what I did. I had $400 last night, and I put on a trade I shouldn't have put on, and I ended up losing 800. So I'm $489 in the hole starting the day. So if it can hit my take profit, I will have profit for the day, but I'm already in the hole so far. I really got to make some big money. Now, the reasonable take profit, that relative equal highs, definitely that's where I'm thinking it could go. But we could go all the way up here. 5,300 is a psychological level, so it's not out of reach. If we put it there, then we have a real nice profit for the day, but it might stop right here. So you can't have a pie in the sky. Oh, I want it to come up here so I make $20,000. You can't really think of it that way. It's kind of a see profit, take profit situation. And in this area, you want to watch real close. If there's any sign that we're not going to continue up, like this is a fair value gap right here. If it were to take that out with a candle body, that means this run is not quite as strong. And see, it just took me out. Now, is the trade still valid? Possibly. At this point, we have the consequent encroachment of this fair value gap. It's going to start right here at the top of that candle and run to the bottom of this one. So if it comes down past this white line here, we're no good. I would like to see it. See, it already took out liquidity here. The fact that it didn't continue up there is a little worrisome. We could possibly run the liquidity grab or all the way down to here. Either way, I got stopped out at $112 profit, which is a whole lot better than losing $1,000 or $800. Will it go where I think it's going to go? Most likely. I think it's going to go at least to that red line, possibly to 5,300. If I would have left my stop down here where I had it, might have been still in the trade, might have lost a bunch of money. You just never know. The trend for the day is definitely down. And the one that I lost $800 on was this one right here. I thought we were going back up. I think, let's see. Yeah, not that one. Right here, I thought we were going back up. I took a long position right here. We double topped right there. And I thought, oh, it's just a pause in the action. We're going to continue up because we've taken out an old high. I mean, that's my market structure right there. 1, 2, 3. It stopped right there. I was up a couple $100, but then it dipped back down and it made a new low. And I was like, uh-oh, that doesn't look good. And I thought, well, maybe it's just going to take out this low and then it'll go back up. And I held it too long, held it to that green candle, and then it just shot down. And so I ended up losing $800 on that trade. But you can see that market structure is very similar to what we're dealing with right now. Oh man, I'm making this ugly. But there it goes on its run. So we were coming down, down, down. put up a fair value gap, consolidated, came back down. Now we're going up again. So if this one would have come back down and made a new low here, it would definitely be an invalid trade. As it is right now, we made a new high. I think I'm going to go ahead and get back in. I'll buy three
Order
right
filled.
there. And with the expectation that we do push above that red line. That's my hope. I'm going to get rid of that. The red line is a previous sell side liquidity, which we took out. It was an area that I'd picked out on the daily chart. You can see how price reacted to it right there. It touched that red line and went straight back up. Here we danced around it for a while. There we came down to it and went straight back up. So it was definitely a level of concern. And a lot of times those will act as resistance. It just now touched it. So I might be in trouble. I should have taken my profit right there. We just took out the stops above this one. Reversal right now is likely. Unless there's more liquidity up above. We do have that relative equal high right here. 1, 2. It didn't quite take them out. It's almost there, but it didn't quite take them out. I'm going to go ahead and put my take profit right there. It won't be as much. It's only $450. Now, you know what? I'm going to put it up a little higher. Right to there. So if it does break those, it'll fill some stops and it should give a little bounce up and then hopefully fill me. Fingers crossed. Let's keep an eye on it. We should do some Jeopardy music or something, huh? Do 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 do. I oftentimes will do music. Market replay. And in this situation where you're waiting for a trade to develop, you can go fast forward. And that's kind of nice because it actually moves really fast. But when you're in the live market, you just have to wait. Hum some Jeopardy music. Well, it peaked above the red line, but I think it still needs to take out a few stops up there. If it does, it should snap into my profit. Right now I'm thinking, well, if it does do that, where would be our next level? Here. I don't really see a clear line. I mean, maybe there. We have several points there. I mean, it's possible that it could come all the way up to here in a snap. That's 5,300 round number is a psychological level. And price doesn't always like to just blow through that. It'll hit it in reverse. Well, that's why I take profit right there is at 5,300 even. We could shoot to that, but most likely we're right at a reverse level if we're going to continue down for the day. I have seen it go on a monumental run. Let's see. Come on. This is the second consolidation. I'm going to go ahead and take it off. It's scaring me.
Order filled.
If you look out there's no fair value gaps in here. There's one from here to here, a small one. That's considered an area of volume inefficiencies or it usually has to fill. The market's going to have to fill that before it goes back up. And so as it's up here and I'm up 400, then it starts coming down to fill these. Well, it could come down and fill this one down here. It already kind of did. But it could come down here and take out liquidity in this area. You just never know. So when you get close to your take profit, go ahead and take it. So now instead of being 400 down after those two trades, I'm only down $3.20. There still could be more upside potential here, but I'm going to need to see it bust above these two relative equal highs substantially enough where we see some serious expansion to the upside, and then retrace back down for another push up high. That's what I would have to see in order to get in another trade. Thanks for watching. If I see another one develop, I'll get on and add it in as well. I wanted to hop back on here real quick and show you something that I like to do. When a price comes down and stops like that, I move my red line down to the very bottom here. But when it stops like that, I try to look back in time to see why did it stop there? Is there a level there? Is there a liquidity level, consequent encroachment, something like that? So, this was the 1 minute chart we were looking at before. We've kind of stalled out here. We're not making new highs. It could possibly move higher, maybe not. But I moved that red line down from the 98, where it was before, back down here to 52.78, because that's the low of the day. So I would think if price is going to come back down and take out liquidity, it would be somewhere in this level, possibly even this one right here, because there's kind of a straight line. But to find out why did price stop there, I look back and see if there's anything indicating. Well, this little swing right here, it came down much further. You can see that right here. They aren't relative equals. This was probably what they call that a Judas swing. They want sellers to think, oh, it's going lower, 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 and then they reverse it back up on them. But that one, it didn't take out any lows down here. That was probably a liquidity run all in itself. So we go back further. And this is what I want to draw your attention to, is this area right here. This is a 1 hour chart, but you can see there's a big fair value gap right here. I'm going to have to shrink this back down to get my drawing tools. But what we do on a deal like that, you mark out the fair value gap. Okay, so it goes from, if you've seen my fair value gap videos, but the top of the wick on that candle to the bottom of the wick on this candle, and everything in between there would be considered a fair value gap. Okay, so then what I'm going to do is make a horizontal line right on that 50, and I'll make it a different color just so we can see it when we get to the other side. Okay, now it's not necessary that we keep that Fibonacci on there. I just want to scroll back and go the other way and see how that compares with where we stopped today. Where did we stop today? Something isn't working right. There we go. Okay. So here is where we stopped today. That is pretty darn close to the 50% mark of that fair value gap. Maybe it wicked below it just a touch, maybe to 55%, but it definitely reacted to the consequent encroachment of that fair value gap back there. So I like to do that just because that's algorithmic movement. It's tuned to go back down to a certain spot and then reverse. Now, does that mean, oh, we didn't take out this fair value gap, so now we're going back up? We did take out the majority of it there. So no, it doesn't mean anything. It's just an observation. It could mean we're going back up. It could just be a reactionary level. We get there and then we go up for a little while. I'm concerned that these weren't taken out, and I see on a 1 hour chart, that's quite a bit of sell side right there. So I would put a line there as a potential, even though we did do a stop run here. And then we do have another fair value gap here. So we could mark it out on its consequent encroachment as well. Go ahead and put a line for it. That might be a target for the day or another day. So that would be a consequent encroachment of a positive fair value gap. I would recommend whenever you're doing your lines, go ahead and mark them, because once you see them later, oh man, I deleted everything. Once you see them later, you won't know why you wrote that line there. So go ahead and just put a little notation. You can do this in TradingView as well as in just any platform. You should be able to make a note. But it's really important, because once you start putting a few lines on there, they get confusing. Oh, well, what was that one representing? Okay, now I'm going to delete my fib, and we'll scroll forward and see, is that in reach for the day? And I'm going to make this red. Relative equal lows. I'll move these as well so I can see them when we get to the other side. Okay. Yeah, just mark those out. Make that red, I guess. And that'll give you a good idea, when you get there. I'm not going to label that one. In fact, I'm going to take it off. I was just putting it on there for argument's sake. But technically, this one's already been taken out with this, but it still respected it when it got there. I think this was a big news day that caused it to drop like a rock right there. But yeah, if we're going up, how high? There's a green candle and a whole bunch of red. Most likely it could go there. We did take out these highs. So I'm looking at this area right here as a possible, if we're going to have a one direction day, it'll go right up about that level, take out some liquidity, and then continue down. That's what my hypothesis is right now. But we could go all the way up here to this buy side. We have two areas of interest up there. Hope that helps. I hopped in on another trade that's already been taken off, but as you can see here, we made a lower high right here. That indicates, we got up to this area of liquidity, took it out, didn't quite get as high as that one. So the momentum for the upside move is slowed. And I kind of watched that for a minute, went ahead and took a short with the expectation that we would come down here to at least halfway in this fair value gap, which we did. These candle bodies never did take out. Well, they actually did. They took out the entire fair value gap, which indicates we will probably have more downside. We do have this fair value gap still to contend with, which that wick came down to the 50% mark of it. But once we got down here and started kind of leveling out, I went ahead and took a long position with just a micro scalp, just to get back above this green candle right here. I just wanted to get a quick little grab of money. I did 3 contracts there, and as you can see, I'm up $496.60. And when we started the day, I was down about that same amount. Now, this price action right here is telling me we're going further south. Most likely, this is a volume inefficiency right there. See how those candles don't touch, the corners of them don't touch. It could just be coming down to this and then going to go back up. I'm not going to take any more trades because I'm trying to train myself. Once I get profit, $496 a day. Let's just round it up to 500 over the course of 20 trade days a month. So 500 times 20, that's $10,000 a month. And what I've been doing, and what I do not want you to do, is I've been saying, oh, I got that much I could lose before I would even go in the hole. I'm going to risk it. And then I lose it all. And then some, trying to get it back. So what I'm going to try to train myself to do this week is keep my money. $496, $10,000 a month. That's enough for sitting here clicking a button. For now, that's enough. So I'm walking away. It's 10:30 in the morning. I'm going to go mow my grass, and I'm not going to look at this computer screen until tomorrow. I hope you enjoyed the videos. I hope you learned something. This is learnable, and you can write your own paycheck. And I'm here to help you any way I can. Appreciate you watching. Love each and every one of you.